Welcome to Woods of Stardom. This is CH. I will be covering the Avantis Emerging Markets Equity ETF that has the Bloomberg ticker AVEM in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video, to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the NEOS S&P 500 High Income ETF. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. Avantis Investors was founded in 2019 and backed by American Century Investments or ACI. ACI is a US-focused investment management firm founded by Jim Stowers in 1958. ACI manages about $280 billion of assets through 1,400 employees as of June 2025. After both Jim and his wife, Virginia, were diagnosed with and recovered from cancer, they decided to establish and endow the Stowers Institute for Medical Research in 1994 as an independently operated and non-profit organization focusing on biological research on cancer, diabetes, and Alzheimer's disease. In order to ensure the ongoing running on Stowers Institute, Jim and Virginia established a unique funding model whereby Stowers Institute was made majority stakeholder of ACI, and in turn, ACI provides more than 40% of yearly profits to Stowers Institute as dividends. I think this is a really brilliant setup. Another key stakeholder of ACI is Nomura Holdings, who has 41% non-controlling interest since 2016. ACI and Nomura view this as a strategic relationship, leveraging on each other's capabilities in their respective geographic regions. Avantis was created as a business arm to offer low-cost, actively managed products to investors. To do this, ACI hired Eduardo Repetto as Chief Investment Officer and Pat Keating as Chief Operating Officer for Avantis. Both Eduardo and Pat happened to be taking a break then, after leaving Dimensional Fund Advisors in 2017. As a result, Avantis has a similar investment philosophy as Dimensional Fund Advisors, by relying strongly on academically supported financial science and consistent portfolio management and investment processes to generate higher expected returns than the broad market, all through a relatively low-cost structure. Many subsequent hires in Avantis also have had prior work experience in Dimensional. Avantis has grown fast and today manages about $100 billion of assets with 32 strategies through US-listed ETFs and US onshore mutual funds. The Avantis Emerging Markets Equity ETF that is covered in this video is one of the featured ETFs in the Avantis website. The Avantis Emerging Markets Equity ETF is set up as a US investment company and is listed on the New York Stock Exchange or NYSE as an exchange-traded fund or ETF. Its Bloomberg ticker is AVEM, and it is available for trading only in US dollars. The Avantis Emerging Markets Equity ETF lists 5 co-managers in its fact sheet. That is the same group of managers indicated for most of Avantis products. Avantis provides detailed bios for its investment managers in the website, so let's take a quick look. Eduardo, as mentioned earlier, is the CIO and heads the team on research, design, implementation of the investment strategies, and is listed as co-manager in most of Avantis products. He was the co-CEO and co-CIO in Dimensional Fund Advisors prior to Avantis, so he definitely has the experience and expertise to run the shop. Ted is a senior portfolio manager and focuses on US domestic and international equity strategies in Dimensional. Matthew is the most junior in the team and was previously an investment associate in Dimensional, helping out on international and emerging market portfolios. Daniel and Mitchell are senior portfolio managers as well, and focus more on emerging markets in Dimensional. It is a bit strange that the bios elaborated on their previous work experiences, but does not specify their roles and responsibilities in Avantis. I can only assume they continue to specialize in the areas they previously excelled in, while working together as a team. This means Daniel and Mitchell likely has more responsibilities or impact than the others to the strategy of this ETF, given their past expertise in emerging markets. The Avantis Emerging Markets Equity ETF provides a simple investment objective and the investment approach in its fact sheet and website. The objective is to seek long-term capital appreciation, which makes it clear that this is not an income-focused strategy. The investment approach bullet points seem to be written more for marketing purposes, so let's look at the details in the prospectus instead. As per the prospectus, the investment scope of the ETF is broad and diverse. That can be companies across market sectors, industry groups, countries, and market cap, as long as it falls under emerging markets. The prospectus provides a pretty clear elaboration on the stock selection criteria that are high profitability as defined by adjusted cash from operations to book value ratio and value characteristics as defined by adjusted book to price ratio. There is an emphasis on smaller market cap companies as the team believes there is a higher likelihood to find high profit value stocks in small caps rather than large caps. Other factors such as past performance, liquidity, tax concerns, etc. may also be considered. Allocation weights of each position are determined using the relative market cap of the stock as a baseline, then adjusted up or down based on how relevant the stock meets the respective selection criteria. The ETF will invest at least 80% of the portfolio in emerging markets. The ETF uses primarily MSCI Emerging Markets IMI Index as the definition of emerging markets that currently comprise of 24 countries as per listed here. The ETF is, however, quite flexible in terms of determining whether a company falls under emerging markets. That may be based on the legal domicile, or the location of the headquarters, or the location of the principal operations, or where the main revenues are derived, etc. So a company that doesn't appear in the MSCI Emerging Markets IMI Index can also potentially be selected. It is also mentioned that the ETF may invest in derivatives and also engage in securities lending. We will see if the ETF provides any details of this in the actual portfolio. While the MSCI Emerging Markets IMI Index is mentioned several times and is actually defined as the benchmark of the ETF, it is clearly stated here that this is an actively managed ETF that doesn't track or replicate the performance of any indices. What this implies is that investors should have the expectation for this ETF to be able to outperform the benchmark over time. The prospectus doesn't really talk about the investment approach, although we can refer back to the more generic investment philosophy of Avantis that was briefly shown earlier. Avantis essentially adopts a similar approach as Dimensional Fund Advisors, that is to conduct active investing via systematic or quantitative modeling approach, relying on financial science and making use of computer models to help sift through data and create investment frameworks for the stock selection process. The Avantis Emerging Markets Equity ETF was launched in 2019, so there are over 5 years of track record for us to run some comparisons. AUM is over 17 billion US dollars, which is a very decent size. The benchmark is MSCI Emerging Markets IMI Index, as mentioned earlier. Portfolio data in the ETF webpage is more updated than the fact sheet, as the fact sheet seems to be refreshed on quarterly basis. I'm comparing the portfolio against the benchmark using the data from the index fact sheet. Emerging markets in equities sense tend to be dominated by Asia Pacific region that has significantly better growth in the last few decades and therefore has many more investable companies. Therefore, emerging markets indices tend to have a pretty similar performance compared to Asia equity indices, and some investors may just pick one or the other in terms of exposures. As shown, the ETF has 82% exposure in Asia Pacific, of which China, Taiwan, India, and South Korea take the top 4 exposures comfortably ahead of the rest. The ETF currently doesn't seem to have any notable differences in country exposures compared to the index. Sector breakdown looks quite similar as well, with the ETF having slightly lower technology and communication services in exchange for slightly higher financials and materials, reflecting a preference for value over growth in the investment strategy. The ETF currently has over 3,800 underlying positions. That is even higher than the index that has 3,080 constituents. This looks really massive for an actively managed fund, and is only possible with systematic or quantitative investment approach, as it will simply be too costly to have a huge research analyst team running fundamental analysis on so many companies. Weighted average market cap of the ETF portfolio is 167 billion US dollars. Although it doesn't mean much, as the index data shows the market cap size of its constituents has a very large range. The top 10 holdings in the ETF comprise 22% of the portfolio, which is lower than the index of 27%. 7 of the top 10 index constituents are present in the top 10 of the ETF, as these are some of the largest companies in the emerging market segment, and the ETF would risk significant performance deviation if it did not hold most of these names. That being said, the ETF does appear to actively manage single position concentration risk, as the top 3 positions in the ETF have noticeably lower weights compared to the index. One concern some investors may have is the massive number of holdings in the portfolio. The ETF webpage provides access to the full list of holdings, whereby it does show a long list of tail-end positions with negligible weights that are less than 0.01% of the portfolio. This is quite common for pure quantitative investment strategies, but investors who prefer solutions that are more focused and run a concentrated portfolio of just high conviction bets may find the investment style of the ETF not so appealing. We can get a bit more idea on the portfolio construct from the factor profile in Morningstar. As seen, the ETF has a clear value bias, but the rest of the factors are not so distinct. Market cap size is hovering in the middle, reflecting the ETF's willingness to look for opportunities beyond the usual large cap names. This, however, negatively impacts liquidity, as smaller emerging companies are less traded. Momentum factor looks a little high currently, but the historical range is big, so nothing conclusive here. As mentioned earlier, the Avantis Emerging Markets Equity ETF has only one US dollar share class that is listed on the New York Stock Exchange or NYSE, with the Bloomberg ticker AVEM. The ETF has a total expense ratio of 0.33% per annum. As this is an actively managed solution, this is considered cheap, especially if compared against typical equity mutual funds in the market. As per trading data provided in the ETF webpage, the ETF has been trading mostly at a slight premium in 2025. Given this is an emerging market exposure, The ETF is occasionally hit by significant market stress, leading to a large premium discount gap. For example, in April 2025, when the equity markets had a small correction, the ETF traded in a wide range of 3.45% premium to minus 2.32% discount over a few days. Investors should take note of this. The Avantis Emerging Markets Equity ETF states in the webpage that it has a quarterly distribution frequency. However, looking at the historical distribution data available for download from the webpage, it seems that the ETF has been paying out semi-annual instead. The fact sheet states the frequency correctly. From the historical data, we can see that the distribution amounts can fluctuate quite a lot. So investors looking for consistent income should not rely on this. Morningstar indicates the 12-month yield is 2.45%, which is not too far off the 2.31% dividend yield of the MSCI Emerging Markets IMI Index. The ETF has no income objective, and therefore simply pays out any dividends collected from the underlying positions over time, which is what typical US listed ETFs tend to do. Given the yield is not too high, it doesn't significantly impact the NAV growth of the ETF, although over time it's still a meaningful amount. Investors do need to take note of US withholding tax on dividends of the ETF, if applicable. As the Avantis Emerging Markets Equity ETF doesn't disclose too much on its quantitative model, and the portfolio seems to be still quite similar to the benchmark index, we can only rely on performance comparison to see if the active management in the ETF is generating alpha returns. The ETF does nicely provide annualized performance data together with the index data for easy comparison, as seen here. On a total return basis, the ETF has done well and outperformed the benchmark index across all 1, 3, and 5-year periods. There is no calendar year data or comparison chart in the ETF webpage though, so let's use Morningstar charts to find out more details. Most of the emerging market ETFs track the normal MSCI EM index, and the performances are near identical, with the lines all overlapping each other in this chart. iShares does have EIMI that tracks the MSCI EM IMI index instead, and it has a slightly better performance than the others, suggesting that the IMI version is a better index to use. AVEM, as mentioned earlier, has outperformed the index, and we can see it was actually lagging behind a little in 2020, but thereafter started to do better with increasing outperformance from 2023 onwards. This shows that the quantitative model is doing well and generating alpha returns, even though it is not apparent from the portfolio data. I covered the Amundi Index MSCI EM Fund previously that has been renamed to Amundi IS Core MSCI EM Fund, which is a passive index tracker and therefore is performing similar to EIMI and underperforming AVEM. The Amundi Fund does have a Sing Dollar share class though, so it is still applicable for Sing Dollar investors. Given the MSCI EM index historically has around 70 to 80% exposure in Asia, AVEM can potentially be used as a solution for broad Asia equity market exposure as well. As seen here, CEMA in the long run has performed similar to EIMI. As AVEM is an active strategy, here is a chart comparing it with some of the popular active mutual funds in the market. For the same time period since inception, AVEM has done pretty well, outperforming most of them and is on par with Allianz GEM Equity High Dividend Fund. Similarly, here is a chart comparing AVEM with some of the popular active mutual funds covering Asia equity market. We can see bigger disparities in the performances here, as different funds take on different views and bets. However, AVEM is still leading ahead most of them, except for only M&G Asian Fund. This again shows it is viable to use the ETF as a solution for broad Asia equity market exposure. Last but not least, we compare AVEM to Dimensional's DFAE, given the high similarities of the investment approach and strategy of the two firms. We can see here that AVEM has managed to outperform DFAE, especially in 2024 and 2025. This suggests that Avantis currently has a slightly better quantitative model than Dimensional for this particular investment scope, and especially for these two bullish equity years. With that, let's summarize our findings. Avantis Investors is the active ETF business arm of American Century Investments or ACI, dedicated to provide low-cost active investment solutions. Avantis looks to be established and run by a strong investment team that are mostly from the reputable Dimensional Fund Advisors. Therefore, the two companies have high similarities in their systematic or quantitative investment approach. The individual manager bios elaborates on their past experiences in Dimensional, but does not cover the existing roles and responsibilities in Avantis. This is an active ETF with a pretty straightforward strategy of investing in emerging market equity stocks through a quantitative-driven model that comes with clear stock selection criteria of market cap as well as value and profitability factors. The quantitative model is understandably proprietary, and therefore no details are provided. This, however, limits the information available, especially with the portfolio construction process, as the portfolio is rather massive with well over 3,000 positions. The benchmark of the ETF is MSCI Emerging Markets IMI Index, that has been performing slightly better than the typical MSCI Emerging Markets Index. Given this is an active strategy, investors would expect the ETF to outperform the benchmark over time. The ETF has indeed delivered a strong performance, especially after the market correction ended in 2022, outperforming the benchmark index as well as most active EM equity funds and even Asian equity funds in the market. As with most US-listed ETFs, this ETF is unfortunately available for trading only in US dollars. Therefore, Sing dollar investors and other non-US dollar investors will have to look for other solutions instead. In conclusion, given its strong performance and decently low cost, the Avantis Emerging Markets Equity ETF or AVEM is a worthy consideration for EM equity or even Asia equity allocation in investors' portfolios. This concludes my absolutely biased comments on the Avantis Emerging Markets Equity ETF that has the Bloomberg ticker AVEM, and I hope it will help in your investment journey. May we all grow wiser and prosper.